It's tax time and we are 3 months from the filing deadline date. What should you be doing over these next few months so that you can minimize your tax bill, put more cash in your pocket, and make sure Uncle Sam is not sharing in your income? I am going to be providing you with exactly the things that you need to be doing. The first thing is get organized. That is so important because organization is half the battle. But I know a lot of people struggle with how to do it. So I am going to advise you to use my 12 by 12 system. You're going to take 12 days to organize 12 months of the year. So for example, your first day, you're going to organize January. You're going to go back through all of your bank statements, all of your checking accounts, all of your merchant statements, credit card statements, and you're looking for transactions that can be tax deductible for you. Organization is a big deal. The second thing I want you to do is I want you to make a list of all your financial institutions. Every place that you do any type of banking or financial transactions, make a list. Why should you make that list? Because you can go to their online portals, you can download your year-end documents, and you can already have it at the ready. Just in case you don't receive it in the mail, you don't want to miss out on a deduction, nor do you want to miss out on reporting income. The third thing I want you to do is consider itemizing your deductions and not just taking the standard deduction. Many times I think that we kind of get lazy and we go for the standard deduction and we don't look for those extra deductions that could push us over and get us a larger write-off. Things like our mileage going to and from the doctor, that's a tax write-off. Our mileage from doing charitable organizations or donating, that is going to be a write-off for you. So I want you to really take the time to see if you can get your itemized deductions to be higher than your standard deduction. And I'm sure that you're spending more money than you actually think. The fourth thing that you're gonna do is you're gonna register on irs.gov. The reason why you wanna register on irs.gov is you wanna create an online account. This is going to be so helpful because you can go to irs.gov, create that online account, pull down your income information. You can find out what third parties have reported on you. Also, you can use it to check your refund, to check last year's numbers. So it's a great thing to have available when you're getting ready to prepare your taxes because you can even get a transcript of your last year's tax return. The fifth thing to consider is right now, go to your child care organization or your child care provider if you have younger children and request the EIN number, their taxpayer identification number, and do it right now using Form W-9 because that is going to give you a child tax credit, and you want to make sure you can take advantage of that child tax credit because credits are dollar for dollar against tax owed, so you can really drop your tax bill very quickly. The sixth thing that I want you to consider is get last year's tax return and print it out and look at it. And I know no one wants to look at a tax return, but let me tell you why this is going to be helpful. It is going to allow you to see exactly what you deducted last year and exactly what was income. It's going to help navigate you to where you need to go, help you remember the types of things that you should be deducting on your return. You don't want to miss out on any deduction. So looking at the past is really going to help you for the future. Number 7, I want you to start making a list of questions that you want to ask your tax preparer. And the reason why I say that is when you're going through your documentation, when you're looking at your financial institution information, when you're going through prior W-2s, when you're going through prior tax returns, things are popping in your head that you want to ask somebody. But I guarantee you, when you get to that appointment, you're not going to remember it. So if you can start jotting down questions that could potentially help remind you of what to ask your tax professional, I'm willing to bet you're going to end up with a lower tax liability because that tax professional is going to pull out things from you just by you naturally asking them questions. Going to be super helpful to help you lower your taxes. The 8th thing that I want to make sure you do is I don't want you automatically thinking that certain deductions are not tax deductible. Do not do that. I want you to jot down everything that you can possibly think of and allow your tax professional to tell you whether or not it's tax deductible or not tax deductible. Many times when I am talking to clients, they'll say, oh, I didn't bring that because I didn't think it's tax deductible. Let the tax person be the tax person and bring them everything. This is your opportunity to squeeze out as many deductions as possible. Number 9, make sure that if you receive advanced child tax credits, that you go back and you find out how much you received. This was an issue during filing season last year. Many taxpayers failed to report on their tax return how much money they received in those advanced child tax credits. As a result of that, you end up getting a nasty grant from the IRS. You end up filing your return, reporting a larger refund that you're not going to actually get. So do not forget to go back through your bank statements and make sure that you're prepared to report that advanced tax credit on your tax return. Number 10, consider contributing to an IRA. This is actually an investment in you and in your future. When you contribute to an IRA, it is going to allow you to reduce your overall taxable income. And you can contribute to an IRA up until the due date of the return. So if you are 50 and below, you can contribute up to $6,500. If you are 50 and above, you can contribute up to $7,500. It's better that you contribute to yourself versus giving that money to IRS. And remember, you don't have to contribute the entire $6,500. Maybe you only do $2,000, $3,000, or $1,000. But remember, investing in yourself is going to reduce your tax bill, and it's going to keep Uncle Sam out of your pocket. So I want you to take my advice over the next 3 months and really start to get yourself organized, get with your financial institution, get that child tax credit, contribute to that IRA, make that list of questions, review last year's tax return, consider itemizing deductions versus taking the standard deduction. I want you to do whatever's necessary to reduce your tax bill. And really, it's really about you putting in a little extra time over this next 3 months so that you can have the lowest tax bill possible, keep Uncle Sam out of your pocket, and invest back in you. And here's the thing, when you know better, you have to do better, which is exactly why I want you to like, comment, and subscribe so I can continue to update you on all things tax.